Welcome to Kaizen Time, part of the Blood, Sweat, and Business podcast, where we provide constant improvement to businesses through timely, actionable financial solutions. Do you want answers to your financial questions? Email us at bsp@kaizencpas.com. I'm your host, Mark Valesky. Now let's get started. Welcome to another episode of Kaizen Time. I'm joined by Henry Jorn. How you doing, Henry?
Good. How are you?
I'm doing great. I really want to get into identifying and eliminating unnecessary expenses. We all incur them, right? Whether it's as an individual or as a company. So let's really get into what a business can do. How do they identify these unnecessary expenses?
Absolutely. So how I wanted to start this off, we're going to talk about the low-hanging fruit, right?
Sure.
Through the course of your business, you have software subscriptions, magazine subscriptions, although those are kind of phased out at this point. But various other subscriptions that you pay for, that accumulate over time, and because of the nature of them, you either pay them monthly or annually. And even if you get into analyzing your financials, you're kind of like, okay, I paid for this last month or last year, so I'm going to continue to pay for them. And even through the budgeting process, you'll look at those expenses from last year and you'll say, we got to put those in the budget because we're going to continue to pay them. But it's probably one of the easiest dollars to kind of, reaccumulate to yourself. Look at those subscriptions, go through them, make sure that you're actually still using the subscriptions. And then, even take it a step further. Are all the users assigned to those subscriptions? Because many software subscriptions are now user-based.
Paying per seat, yep.
Or have you termed some of the people that you're paying for still? That is literally money, after the government takes some, that goes straight into your pocket. Easy money. You don't even have to work hard for it. So absolutely something that you should do. I would recommend trying to do it quarterly, and it doesn't have to be a calendar year quarter. It could be, one of the off months that you do it quarterly. That way you're not also doing it while you're trying to, do quarterly payroll taxes or quarterly financials or quarterly budgeting or forecasting or trying to meet quarterly sales targets or whatever else that you do in calendar quarters. You're absolutely welcome to do this in the other months.
Okay. What else are we looking at here as far as unnecessary costs?
So maybe getting into, we'll call it like cost of goods or maybe equipment that you use for your business. With equipment or it could even be hardware or software. You have an opportunity. Do you need that hardware or software? Or if you upgrade those things, what is the downward effect on, for example, labor cost, right?
Okay.
So, you've got a lawnmower that cuts 20 inches right now that you push around your yard and you cut your grass. However, if you pay an extra $100, you can, on top of what you paid for the original lawnmower, you can now have a lawnmower that cuts 25 inches of grass.
Makes sense. And you're saving that much more time.
So now you're saving that much more time, paying that much less in labor. Or, if you are a self-proprietor, it's your time. So you could either, go off, do other jobs, or, you have more time for yourself, which is a part of why we do this, right?
Gotcha. Yep.
The other part, with vendors, right? You have 3 vendors. You purchase the same things generally from all 3 vendors. Now you have an opportunity to go to each vendor and say, hey, if I give you this other vendor's business, what can you do for me? Can you get a, price decrease or even negotiate terms? I think terms kind of get lost a lot, in negotiation. that 15-day increase or decrease on terms, that helps improve cash flow.
Gives you that flexibility, right?
Absolutely. And especially like as we go to smaller businesses, they are more dependent on that cash flow. They may not have a line of credit to depend on or outside investors or other, access to capital. It might just be their own capital that they have earned over time.
Okay.
And then going into labor costs, right? Through my podcast, you always hear me talk about labor costs. It's the squishiest thing that you kind of have on your P&L.
And labor costs keep going up.
Labor costs keep going up. Let's take, for example, you have a team of 10 people, right? Mm-hmm. If you ask your 9 strongest people, if the 10th person gets eliminated and you can give them all $1 raise, there is a good chance that they're going to turn around and say, yeah, we want you to do that. Mm-hmm. And I'll be honest with you, 9 times out of 10, that 10th person, nobody likes them anyways.
or even then it was slowing them down, right? It was preventing them from doing other activities.
Potentially, yeah. Mm-hmm. The weakest link generally drags down, the aggregate.
Okay.
So, like you've heard it, the weakest link, the team is only as good as the weakest link. So here, what we're doing is getting rid of the weakest link.
Okay.
And giving our other employees that are not the weakest link better life, right? They're mm-hmm. getting a raise essentially. Mm-hmm. And now you're getting the same or better productivity that you had before.
Mm-hmm. So you're rewarding, those who are your stronger members, right?
Absolutely.
Okay. And what else would you say?
So the other item that I wanted to touch base on, and we've kind of seen this a lot with, the whole gravitation away from office work, right?
Okay.
And it is absolutely an opportunity for every business. If you have staff that can work competently at home mm-hmm. and you're able to or either get rid of, space that you're paying for or lease it out to somebody else or whatever else you can do with it. I mean, that is a great cost savings. I mean, if you think about it, Walgreens, right? They used to have a huge building in, I think it was Deerfield.
Okay.
They have slowly been migrating to a much smaller office in downtown Chicago.
Okay. And people really don't, I wouldn't say it, people think about that, right? Like you're paying for the space, but if it's literally doing nothing, if there's nobody there to take it up, you might as well use it for something else or have it utilized by someone else.
Right? Absolutely. And the other way that this comes into play, and you don't think about it the same way, but grocery stores, right? Mm-hmm. They've essentially eliminated a lot of the bagging and checkout
cashier positions. Yep.
In favor of self-checkout. And I know some stores have gone back and forth on it. Mm-hmm. But if you ask I guarantee if you ask any analyst, there's a very low likelihood that the theft that occurs as a result of that change mm-hmm. is more than the costs of paying the wages for all those people. And it's not always just paying the wages. You also got to pay someone to manage those people. Mm-hmm. You have to deal with, the unfortunate unintended consequences of being human, right? Like my kid was sick. Mm-hmm. You'll never hear a self-checkout machine tell you that their kid was sick.
If they might did, have then
a cut wire.
I'm about to say that if that's the case, artificial intelligence has really jumped up in its powers lately.
So, that's just something that you see it at grocery stores is probably mm-hmm. the biggest indicator, but we're starting to see it in restaurants, right? Yep. Like you have the robots that come and serve your food for you and take mm-hmm. your order. Mm-hmm. Or even, you get a tablet that you put your order on mm-hmm. instead of a server. I know some people, this puts them off. They like the
human element. Yep.
But again, this podcast specifically is about mm-hmm. cutting cost. Mm-hmm. And
Well, so let's just recap, because we're looking at the unnecessary expenses, and really unnecessary just means you're producing the same amount of work, right? You're doing the same. You're doing
using less resources.
Got it. That's right. So let's do a quick recap. Subscriptions are a big one. Just reviewing them all the time.
It doesn't even have to be just subscriptions. It could be any annual thing or monthly thing that you pay for, that you think that you need, but maybe you don't.
Okay. All right. Then next is like vendors and material, right? So, hey, investing in machinery that can potentially do more or better over the course of time.
Absolutely.
Right? Also touching base with your vendors to see, basically what pricing options they may be able to give you or future flexibility. Then labor costs, right? So seeing if you can produce the same amount with less people.
Yep.
Right. And then assets specifically within your property that utilized, or, kind of like overhead at like a grocery store, like, people just overseeing a process. Right.
Absolutely.
Perfect. Anything else you want to add, or are those kind of the big ones, or is there anything else?
Potentially in a future episode, I do want to.
Are we hinting at something else
on Slack?
On Slack,
yes.
Give me a preview of what the Slack is.
Slack. Are you staffed to do the maximum amount of productivity, or are you staffed to do the minimum amount that you need?
That'll be coming in the future. I look forward to it. Thank you very much, Henry.
Thank you.
You've been listening to Kaizen Time, part of the Blood, Sweat, and Business podcast. If you like what you heard, subscribe and leave a 5-star review. This podcast has been brought to you by Kaizen CPAs Plus Advisors, providing advisory and accounting services to help you grow your business. Learn more at kaizencpas.com or email us at bsb@kaizencpas.com.